Hi, I'm Matt Simon, analyst at TABB Group. I'm joined today with Vlad Khandros, member of a corporate strategy team at Liquidnet. And today we're going to talk about some of the regulations and off-exchange proposals that have been posed by the SEC and some of the things that are going on in the dark pool arena due to some of the volumes that have been reported there and some of the controversies that we've seen. Vlad, what's been going on? What are some of the catalysts behind some of these proposals and why has there been such debate?
Right. Well, thanks very much for having me, Matt. I think the questions you ask are good ones, and they're ones that we've been getting asked a lot by our buy-side members. There's a lot of concern in Washington that much of the volume in the U.S. has shifted from the exchanges to off-exchange venues. To be honest with you, it's a concern. The data shows that the vast majority of volumes are still on the exchanges. About 70% of the volumes are on the registered exchanges once Direct Edge converts in a few months. So we've really been battling perception as of late. Really have been going down to DC, to the SEC, to the banking committee saying, look, the equity market's working well, but there's room for improvement. But if you're going to change it, let's make sure we understand how the large asset managers, the buy side, are impacted.
And what are you hearing in DC? I mean, what are some of the reactions and what are some of the things that you're getting feedback on from just your buy-side community about what you're doing right and maybe what you think that you need to take a step back from and say maybe we need to take a different approach?
Again, it's another great question. I think honestly, a lot of folks watch what's going on and they wonder, why is this happening? Why are these questions being asked and why is it that the equity space is being targeted? I think a lot of the issues here is that people understand the equity space much better than they understand other asset classes. And there's a lot of retail involvement in the cash equity space relative to other asset classes. That said, a lot of our approach has been really focusing on large asset managers. There's no doubt about it that most Americans don't trade on their own. Most Americans give their money to professionals, large asset managers, and rely on those traders to protect them in the market. And that's really what we do as a firm, whether it's we're protecting our members by giving them natural liquidity, by protecting them from other market intermediaries, or now by protecting them from some potential legislation in Washington that may not be of benefit to them.
So many of these issues affect the big investors, and they're obviously many of your clients. In the concept release, there's a lot of different, it's a 74-page document that the SEC has put out. They've asked a ton of questions. I mean, what's number one, number two, number three on the agenda? What needs to change?
Right, I'd summarize that concept release as saying, what should the market look like? And it's a great question to ask. I think we're pretty happy that the SEC is looking at the market from a top-down approach. They're saying, we can't change one thing without changing many others. So I give them a lot of credit for making this process a little longer and getting a lot of input from many different market participants. In terms of what should change, I would say a lot of it is really where the focus is. And I think right now there's a lot of focus on self-directed retail traders rather than the asset managers. There's some great comment letters that just came in. Vanguard had submitted a great one just yesterday on the 21st of April. Fidelity, Texas Teachers both wrote some really strong statements that basically said, we represent mom and pop more so than anyone else. So please recognize that if you're going to change the market. And recognize that the tools such as Liquidnet and others help us to reduce the cost of trading, ultimately deliver more returns to our constituents.
So many of these exceptions and many of these things have also touched because they're targeting block trading facilities, and there's just a lot of rules that go around the exceptions for them. Specifically recently, we've been looking at the trade at rule, which is something that's come up and has been obviously debated amongst a lot of the market participants. What are some of the thoughts by Liquidnet on the proposal?
Sure, we've heard a lot of conflicting views from our members. We spoke with literally dozens and dozens of head traders on this issue. We heard a lot of folks say it's great, we heard a lot say it's terrible, and we heard a lot say they're in between. I think, based on what some of the large firms have said, the concern is that there's a lot of internalization off the exchanges, and the internalization is not giving much price improvement to others. And it sounds like that's where a lot of the concern is. It's that you can ignore the quotes or not hit the best quotes, trade orders off the exchange, not give price improvement. And I think the exchanges are definitely concerned. They're saying, we're giving the best price and no one's hitting it, and they're trading off of that price elsewhere. Our response to that really has been, the answer is probably somewhere in between. It's important to look at issues like trade at, but it's also important to not look at them on their own. We've got to consider the impact to all the other market participants, all the other trends in the market that would come about as a result. I'd say the unintended consequences.
Yeah, I mean, one of the other things that we've seen, I mean, with a lot of your big clients is they're also going global. So shifting gears a little bit here, outside the U.S., where do you see some of these things? I mean, the MiFID rules have been looking at some of the proposed changes, and they're starting to look at some of these differences across the European marketplace. What's some of the views, and what do you think some of the changes should be for the suggested changes in Europe?
Right. To your point, the FSA is getting very active. Caesar's doing a lot of work right now. They're asking for comments on, similar to the SEC, what should the market look like? What should we be doing? And it's not just Europe, to your point. It's Canada, it's Australia, it's Japan. It's really all the major markets, and even the developing markets are starting to look at these trends.
Do you have a strong view in Europe on what needs to change tomorrow?
Right. Our position in Europe has been, it's important to understand what's going on. Effectively, we've said today, our feeling is that there isn't really a level playing field. We feel like different venues are treated differently for reasons we don't necessarily understand. And we've said we want a level playing field, but if you're going to discriminate based on the fact of who represents what type of constituents.
And then just lastly, more recently, we've seen volumes pick up in the U.S. I saw that on our liquidity matrix, the TABB Group liquidity matrix, that Liquidnet reported 30 million shares per day in March. How's business been going, and has volumes picked up? Have you seen the same thing?
Yeah, things are going well, to your point. I think we're really focused on the large institutional money managers. We actually just reported a record quarter in Asia, in Europe, and in the U.S. We're seeing a lot more large asset managers with good inflows into U.S. equities, which is obviously good for a number of us. And that figure you gave was our single counted figure, and which, depending on how you count it, I think things look pretty good for us all around. I think Greenwich said we were a top 10 institutional equity broker last year when we last saw the data. I'd say things are looking good. A lot of the trends we're talking about also relate to U.S. equity inflows, which determine the volume. And that's, of course, not even getting onto trends around high-frequency traders, which we haven't even touched on. We could spend a whole few hours getting into that next time.
Well, we'll save that for next time. Again, I'm Matt Simon with TABB Group. This is Vlad Khandros with the corporate strategy team at Liquidnet.
Thanks, Matt.
Thank you.